Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. As we get started, could you just do me a favor? Sometimes when I'm at home, the audio is a little bit worse quality when it accidentally switches to my webcam mic. I just want to make sure, are we good? Does the audio sound clean? If it does not, please let me know and I'll try and play with my settings. I think it's set correctly. Just want to make sure. Also, somebody said it's not PMI today. That is correct. I think we might have an issue in the title or an error in the title, unless I'm missing something, but I believe we do not have PMIs today. So I apologize for that if that is a typo. If so, maybe we could sort that out on the back end. I think that is correct. I think we do not have PMIs. Yep, we'll get the title changed. Don't worry. Audio's good. Thank you. Awesome. Appreciate that. Okay, so hope everyone's doing well. We have some interesting stuff happening across the markets. Dollar index is up a little bit here. I think there was a little bit of some news overnight in Europe. I believe there was some drama with the French politician. Is that correct? Does anybody know anything about that? Let us know. But you do have Euro making a move lower here this morning. British pound moving a little bit lower. Dollar yen is up. So a little bit of strength in the dollar. And I'm not going to lie, I am still really cautious on markets. But I've added a new kind of study into the mix, which is going to be yields. Here's the thing, right? One of my biggest concerns right now is that we have one of the biggest concerns that I have right now with markets is that the Fed has all but signaled rate cuts are coming. And we see some response in the 2-year yield, but there is concerns that we do not see as much of a follow through in the longer duration bond market. Now, I don't want to get too bond market technical because I know that it alienates some of the newer guys and girls because bonds are tricky even if you've been doing this stuff for years. So let me try and explain this really simply and just address the concern that I have with what's going on. When the Fed comes in and says, hey, we're going to start cutting interest rates, what would you expect interest rates to do? You would expect interest rates to go down. Now we're looking at a daily chart. So let's zoom in kind of more locally and just look at kind of the Fed's, here was the NFP report. And then of course, last, am I getting my days mixed up? Fed comes in and says, okay, yeah, basically we think it's reasonable to start adjusting our policy rate. Okay. So the 2-year yield also, markets in France fell as Prime Minister Bayrou's austerity budget confidence vote sparked political turmoil and higher bond yields. Okay. Thank you for that. Okay, so here's the thing. Bonds are boring, but they're the most important thing in the market by far. No, the bond market's the most important market. It doesn't matter what you trade. If you trade currencies, commodities, indices, stocks, cryptos, the bond market is the most important market, hands down. No question. Why? The bond market holds the key to studying what central banks are going to do. Central banks provide money into or out of the system. It is really that simple. You want to know why stocks go up or stocks go down or crypto goes up or down, or you want to talk about gold spiking or falling, currencies, their strength, which currency looks stronger. It all kind of circles around the bond market. Bond market is so critical. And most traders don't even have a mild understanding of the bond market because, again, bonds are boring. Don't look over there. Don't watch bonds. Let's just all watch, Ethereum, because that's exciting. Don't pay attention to the man behind the curtain is basically the bond market. Okay, bond market's critical. Why? Bonds are difficult to understand, but they're also the key to understanding what the market kind of thinks the Fed's going to do. And what the market thinks the Fed's going to do dictates a whole bunch of other stuff. Okay, so we have the Federal Reserve Chairman, Jerome Powell, come out and say, essentially, we see risk to jobs, we see risk to inflation, so we should cut interest rates. But bonds don't necessarily trade off of what the Federal Reserve says. I know that's kind of hard to believe, but the Fed controls the very short end of borrowing rates. They control like the 2-year, the 1-year, the 3-month, all that stuff moves very heavily based on what the Fed says. But long duration bonds, the 10-year, the 20-year, and the 30-year, which, by the way, long duration borrowing, bonds, that's borrowing costs for things like houses and for cars, like the 7-year, the 5-year, right? These are interest rates that matter to people. And, if you're going to go buy a house, you really care about mortgage rates, right? In the US, we do 30-year. I know in other places they don't do 30-year mortgage rates as often, but in the US, we have like 30-year mortgages that you can do for houses. So that rate matters a lot to people. It really does. And the reason I bring this up is because that the bond market is acting kind of funny. So the Fed signals, hey, we're going to cut interest rates. This should be moving lower. If the bond market feels like, yes, that is the correct call from the Fed, the bond market should be saying, in line with Jerome Powell, yeah, we're going to lower, like interest rates should be coming down. Essentially, people should buy bonds, causing the yield offered to go down. If everybody's buying bonds, the yield offered, this number here, should go down, right? Remember that bonds and yields move inverse to one another. So when yields fall, the value of bonds goes up. When bonds when yields rise, the value of bonds goes down, right? So if the Fed is saying, hey, we are cutting interest rates and we think it's appropriate to do so, if the bond market agrees with that consensus, bond values should go up. People should go out and buy bonds. Hey, if the Fed's cutting interest rates, I better lock in some bonds now at these high interest rates before the interest rates come down. Remember, when you're buying a bond, you're the lender. You want higher interest rates because you get paid to hold those bonds and you want higher yield on your lent out money, right? It only makes sense. So the reason I'm bringing this up, trying to keep this as simple as I can, I know it's not a simple concept. It is kind of complex. The reason I'm bringing this up is that my concern is that we may still have inflation risk that is also mixed into the bond market's thinking. Long-term, 10-year, 20-year, 30-year, the bond market looks at inflation projections. It looks at the state of the U.S. economy. It looks at wage growth. It's not looking at what the Fed funds rate, right? When the Fed cuts interest rates, that impacts the short end of the bond market. You can buy bonds that are 2 years till maturity, or 1 year, or 3 months. You can buy all these sort of short-term bonds, or you can buy the long-term bonds, 20-year, 30-year, or etc. What I'm concerned about is that if the Fed cuts interest rates and the bond market approves, the yields should be moving lower here. They're kind of not. That to me also sort of reiterates a concern that we may have, which is stagflation, where you still have sticky inflation, but at the same time you have labor data that is weakening. So the stock market is right there at all-time highs. You have the bond market. And by the way, I was listening to a video, somebody who did a really good report on this. The only other time that we got the bond market kind of come straight up disagreeing, like essentially the Fed starts cutting interest rates and the bond yields actually go up. They're supposed to go down. Bond market, usually yields go down when the Fed cuts rates. Well, if the Fed cuts rates and yields go up, that's only happened one other time. And it was after the 70s, I believe. And there was a massive market sell-off because, again, the bond market was panicked about inflation risks and the Fed was cutting interest rates anyways. And that combination made bond investors really uncertain. And to me, it also makes, again, a good case for why I like metals, why I'm cautious stocks, and why I think the dollar could continue to move lower. Why? Dollar's not necessarily moved. It doesn't exactly move necessarily with interest rates. It moves based on relative attractiveness to other currencies. So I think the dollar may actually continue to look bearish. In my personal opinion, I'm already in a short position on the dollar via my euro dollar longs, which did come back into, I'm back to like break even on the trade. I'm also interested in potentially trying another long around 114 on the euro. So I'm long here. I'm looking for another long at 114 if it does come down, and probably would even try a third time at 113 as long as the fundamentals still look good at that time. Nick, the U.S. stock market valuation hit all-time highs recently. What are your thoughts? Yeah, that's a good thing to bring up. I saw that chart too. I think I know what you're talking about. There was it like one of the big banks or something? It might have been JP Morgan. They posted that stock valuations across like a selection of different valuations, like price to earnings, price to sales, like a whole basket, EBITDA, like all these different metrics to measure stocks. The combination had hit a record high. On one hand, you say, oh, that's creepy, right? Stocks all-time highs and highest valuations based on this subset of, selected financial metrics criteria. And then you say, okay, so what do we do with that? We say, do we short the market? Do we sell the market right here? Well, here's the other tricky part. Technologies are accelerating. Things look different than they ever have before. Technologies, and I know that's a sort of a famous last words because they said that about the internet. But the difference is that in the internet bubble that blew up and caused a massive market crash, companies weren't super profitable. When you look at a company like Meta, when you look at a company like Google or Nvidia, I mean, these are companies that make a boatload of money, right? They make a ton of money. This is not the same recipe as the internet bubble in the sense that companies that are leading the charge are making a ton of money. So I am definitely not a fan of saying, I'm not a doomsdayer, right? I have issue with the bond market's reaction so far, and I'm going to watch that like a hawk. In fact, I have a chart somewhere for this. Do we have this still? It's been so long since I even looked at this. The U.S. Treasury yield curve. This page usually takes a second to load, but I'm curious if it tells us anything. Okay, so the U.S. Treasury yield curve. I know I'm on a bond fix this morning, and it's hard for me to talk about bonds because I know that like 75% of people in this room do not look at bonds, do not care about bonds, and do not even understand bonds. And to be completely honest, neither do I. They are confusing as anything. I do understand them, but they're still tricky. They're very tricky. The U.S. Treasury yield curve that we've got here looks at the 10-year bond yield, right? The yield offered on a 10-year bond versus the yield offered on a 3-month note, okay? Now, why does this matter? Notice when these kind of red lines come into the picture. Those are instances in which we have yield curve inversion. And it's essentially where the short-term interest rates offered are sort of bigger than the long-term interest rates offered. That is shifting back in the opposite direction. But what I think is concerning about this is that what we have said, and again, I am not like trying to sound like a doomsday person on social media about the stock market. That's not me, and I am, I usually like the doomsday perma bear stuff is kind of annoying to me, but I do have to call what I see here. Each time that this thing became uninverted, that was usually around the time that we got major market sell-offs. So there's some risk here, and I think it's the bond market that's telling us that. It's the bond market that is calling that there is some serious concerns here. Look at the last times these have happened. 2000, we saw the bubble, the dot-com bubble days blow up, right? 2007, 2008, we all know what happened. Financial crisis, right? 2019, going into 2020, we all knew what happened there. And now we have it happening again. So does this cause me to be concerned? Kind of. Again, do I need to go out and short stocks today? Do I need to go out and call that the stock market top is in? Would it sell me a bunch of books? I've never written a book, but probably, right? It sells. People love that fear and that. So I am not here to issue you like, oh, the stock market is going to crash. Okay. I don't know. And anybody who claims to know exactly when the stock market crash, I mean, not to, dog on anybody too hard, but that guy, Robert Kiyosaki or whatever, he has been calling for a stock market crash since the dinosaurs walked the earth. Like it's been every single year. Like, I don't know if you guys have ever seen that chart, but there's a chart that floats around social media where it's times that he had called for a stock market crash. The reason I'm pointing him out specifically, there's many traders or many commentators like him, right? And again, I like a lot of his work and some of the things that he says are great, but he calls for a stock market crash every year. By the way, he also loves gold and Bitcoin. So, he has a little bit of something over here to sell you too. But my point with saying that is this. Nobody knows when the stock market's at the top. And a lot of times there was in the 1996, actually the month that I was born, December of 1996, was it Alan Greenspan? Who was the Fed chair? Who was Fed chair in 1996? Was it Alan Greenspan? Okay, yes. Alan Greenspan famously said that he thought in 1996, this was the chairman of the Federal Reserve back in 1996. I don't even have that on my chart. This chart. Okay. He said in 1996, right? It's a famous thing. He said, I think we're basically in a bubble. He said, assets are overpriced. This was the Fed chair made a very strong proclamation that he thought essentially, actually, I guess it was over here, that assets were in a bubble, essentially. And even though he was right, do you see how early he was? And in the trading and investing world, if you are wrong in the timing, you are essentially wrong. At the end of the day, it doesn't matter if you can call what we're in right now, you can call it a bubble. And if you keep saying it, eventually you might get a market correction. And then you can say, look, I was right. The reason I'm harping on this is because trying to time the top of a stock market run, he was years early and he's really smart dude. Like, he's not a dumb guy. Like, so my point is, you're going to get it. You're going to see it on social media. Oh, you're going to have a crash. Oh, you're going to do this. Nobody knows, right? And don't let somebody fool you into believing that they know when the market is going to top out. Bull runs can become way more stretched than you think, right? So Nick, why are you so cautious on the market? Well, even though I don't claim to know where the top of the stock market is, even though I don't know the top of the stock market, I'm also not foolish enough to believe that I can call it. Even though all that, I still don't necessarily want to buy stocks when I believe that they are expensive. I believe stocks are expensive right now. Could they get way more expensive? Absolutely. But the better way to play this, in my opinion, is to perhaps look at areas that are not so expensive and or wait for market corrections or dips. I know I'm kind of on a hype, or I'm not really talking about today's market analysis today, but these are really important things that are super critical and super important. History never repeats exactly, but it tends to rhyme. And I am, not a bear on the stock market. Again, I'm not short the market, but I think there are times to say, okay, the risk to reward, and that is all we can do as traders and investors. The risk to reward on stocks, at least technology stocks, which make up like 40% of the S&P 500, just don't have the same appeal as that they did even when the market was selling off earlier this year. I mean, I bought a lot of tech stocks and I did really well on these. Like I had a really great year this year so far. But there is a time where I say, okay, let's look at what we're dealing with. We've got a yield curve that is uninverting alongside of some of the economic reports, the US economic heat map. And again, I want to say something too. I've heard people just like myself doing this. I've listened to 100 different, commentators make these sorts of like, oh, be really cautious. And then the market goes up. Look, you might look back in a month or 2 months and the stock market's higher than where it is today. I am absolutely not trying to call a top or time a top. I'm not short the market. I'm not buying puts. I can't call the top and I don't need to, right? What I'm saying is that the risk to reward to stocks right now does not look attractive enough for me to deploy new capital into stocks. I own a bunch of stocks. I am doing some options trading around stocks, but I can't rightfully add new money into stocks or into risk assets like cryptocurrency when I see what I see right now. Let's look at the US economic heat map, which is getting a concerning mix of data. Okay? You ready? PMIs and retail sales, pretty lackluster. We missed expectations. This is a forward-looking indicator of how major players in the economy see the economy going forward. Hire people who are hiring managers. They see sale orders coming through for their businesses. This is a really key indicator that looks ahead. Are there some bias that can be mixed in? Sure. That's why this is not the only thing we look at. But manufacturing and services PMIs are showing some concerning signs, right? Stocks impact, that's going to be negative. Retail sales also missed expectations slightly. They did have some positive revisions to the prior month. CPI is at 2.7%. It did, kind of stay steady at 2.7. Didn't go up as much as forecasted. But then you have PPI, right? The producer price index year over year spiked. And that to me is a risk too. That's bullish for the dollar, but it is bearish for stocks, right? Take a look at PCE numbers, PCE, which we get fresh data on Friday. So take this with a grain of salt, but it did come in the previous reported number. It came in higher than expected, right? We're looking at forecast versus actual. Wage growth. Wage growth is still tricky. And I think this is wage growth is good for the people who are getting wage increases, but wage growth remaining sticky can be a contributor to prices staying elevated as people get wage increases. We also have unemployment rate in the US at 4.2%. That's not really concerning, right? So unemployment rate seems to be in a pretty decent spot. Jobless claims, however, did come in higher than expected. We'll get fresh data on this tomorrow. Tomorrow morning, we get the jobless claims. JOLTS job openings, we did see some weakness there. We'll see fresh data towards, pretty soon, actually. I think we have JOLTS job openings very soon. ADP was a little bit better than expected, but NFP, right, the big one, non-farm payroll, missed expectations pretty sharply. So what's the thought here? What's the consensus? Well, we have inflation that is sticky, and we have jobs data weakening, and we have growth metrics that are soft as well. The stocks impact bar here, right? 33% of our indicators suggest optimism for stocks. That's not very high. And so if the stock market was down 15, 20% from the highs, I would look at this a little bit different. But you have this data in combination with stocks at their all-time highs and in combination with the bond market not necessarily cooperating what the Fed said. So if you have the Fed say, hey, we're going to cut interest rates, and essentially he signaled their policy is restrictive enough and that they think they can cut rates, the bond market is saying, okay, the 2-year yield is moving more in line with what the Fed is saying, which is kind of typical. But the longer term bond market didn't have some kind of, big confirming, yeah, we think that's the right move. And to me, that is seriously concerning. The 10-year yield moving lower would add some kind of confidence to, okay, the bond market's we're going to enter into a sustainable cutting cycle. Do you know last time we entered into a cutting cycle, the last time the Fed cut rates, do you guys remember what happened? Similar story. We cut interest rates by 50 basis points. And you know what the bond market said? Too soon. We shouldn't have cut rates. The bond market is the fourth wing of the US government. I say that frequently, but it is the fourth wing of the US government. The bond market is absolutely critical. Okay? Let me help you understand something if you don't follow. The bond market is not controlled by the Fed. The Fed, fiscal policy, all these politicians, they can spend $1 bajillion, right? But the bond market bids on how much they are willing to lend the government money. The piggy bank, aka the bond market, is critical. And so again, most traders, even a lot of investors do not even look at yields, but they matter tremendously. So my concern is that, okay, if we're going to cut interest rates, we should start to see yields trending lower across the curve. The short-term curve, the 2-year yields, the 3 months, the 1 year, and the long-term stuff. Way more money in bonds than stocks. Yep. Man, I'll tell you guys, this channel and Nick has been such a significant addition to my trading career, and to focus on the fundamentals. Keep it up. A1. Fallout, thank you very much, my friend. Appreciate that. Fairly new to bonds, in my knowledge, yields are also an indicator of risk. So it may be that these rates are reflecting the current uncertain and risky environments. Yeah, I mean, I think people are kind of like, look, the government has printed so much money, and there is no signs in front of us that say the government's going to stop printing so much money. We've dealt with inflation in recent years, and investors are like, why should I lend the government money if it's just going to get inflated away from underneath me? I think that's what the bond market's saying. Inflation risks are still there, and we're looking to cut interest rates, which could spike inflation, right? So I think that's what the bond market is saying. That's me trying to, that's the thing with the bond market. You always kind of have to make a best guess of what the bond market is saying, because it can move up and down for different reasons. It can move up because the economy is so red hot that people think, there's no need to why would I buy bonds? I'll go buy stocks, right? That causes yields to go up because people are like, I'll take my money and buy stocks, and bonds become relatively less attractive. So there's a risk on, risk off factor. There's inflation risk. There's wage growth concepts in there. There's the economy. There's global risk sentiment. There's so much baked into the bond market. It is crazy. Okay, so I also want to mention something. If you enjoyed this conversation, we went super technical today, I guess fundamental today, but we went into the mechanics of the bond market. We talked about economic data. If you are somebody who is serious about this stuff and you want to incorporate it into your trading, all that stuff's great. You can watch this stuff on YouTube all day long, but the better thing is like, okay, what are we actually here to do? We're here to trade. We're here to invest. We're here to find opportunities in a market. You need something that takes all of this hypothetical knowledge that we just got done discussing, and it actually turns it into something actionable. That is where the EdgeFinder comes in. So yes, I have a quick sales pitch for you. If you do not have a copy of the EdgeFinder, I've got something exciting for you. First of all, we just dropped a free version of the tool. If you want to try out the free demo version of the EdgeFinder, it does have limited features, but it is completely free to get access to. We'll drop a link here in the chat as we speak to take advantage of the free version of the EdgeFinder. Okay. And the last thing I'll say about the free access version is if you do not yet have it, stay tuned. We're going to be making some announcements because for a very limited time, I mean, genuinely very limited, we're going to be letting people try out the top setups page as part of the free version. For context and for details, the best way to stay up to date with that, again, this page, the McDaddy page, what everybody wants, right, is the top setups page, which essentially looks at all the data that we just got done discussing, economic data, technical data, sentiment data, and sorts it into setups. It scores, ranks, and files all of the different assets that we watch. If you don't have a copy of the EdgeFinder free version, get it today. Because again, it is free to join. It is there. We don't take your credit card. We don't want any of that. We just want you to check it out. And if you like it, consider buying it in the future. Here's the link. Get access with that link there. Check it out and see what it's all about. Again, if you're serious about your fundamentals, I am a little bit biased here because I'm selling it and because I built it. But I think it's one of the better tools that's out there to help actually turn this hypothetical stuff you hear all across social media into actionable analysis, insights that can help us to actually find trades based on this. Again, I remember doing this over the, before I had my own tools and things. I would see all these traders, investors, and podcasts and all these things where people are talking about the markets and they sounded really smart, but I was like, but what do I trade? Where's the opportunities? Where is the scoring? And so that's why we built this. It's been a campaign to build over the last few years. And we have traders all around the world using our tools. So if you want to check them out and try them out for yourself, there you go. With that said, up next, we have a special guest taking over the stream. It is, of course, Marco from Marco's Trading Journey, also fundamentals focused and technicals as well. Trades a wide range of markets. And again, with the theme of this show and channel, actionable, right? That's the key thing is you can watch this stuff all day long. You can watch YouTube. Actionable. What are the strategies? What are we looking for? What are entries and exits and reasoning behind trades? That's what we do on this channel that I think separates us from others. It's very annoying when everything is just hypothetical, but nobody ever shows you their account or trades at their end. And that's what we do on this channel. So up next, you've got Marco. Check him out just after this quick break. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello everyone, welcome to my segment of the live stream. So I hope everyone is doing well. Let's take a glance at the markets. So today we have a pretty important event that would be Nvidia earnings. So handy tool on TradingView is this little lightning bolt here, and you can see Nvidia will release its earnings report after market close with expectations for record revenue and operating income. Investors are focused on bookings from China and AI product demand, so artificial intelligence. Now, Nvidia is a big chunk of the Nasdaq and also of the S&P 500. So if Nvidia has great earnings, stock market explodes or Nvidia explodes, and S&P plus the Nasdaq can very easily follow. Now, what does that mean for me personally? Because I'm looking for buy setups on the Nasdaq, well, it means I won't get an opportunity to get in. So for me, it would be better if the earnings were kind of bad so that we start getting a bit of a pullback. So if the earnings are good, the market is just going to keep flying away without me, and I'm not going to be able to get in on a pullback. So I would prefer to see a bit more of a bearish price action, a bit of a retrace, and that would fit my plan a bit better to get in at these support levels. Okay, so the stock market, that's kind of my view on the stock market. Long term, I'm bullish. Short term, I'm looking for pullbacks. I'm not seeing them right now. It's all going to be about the rate cut story. It's all going to be about the bond market as well. Again, everything is connected, as Nick talked about in the prior segment. So even if the rate cuts come, maybe investors are losing confidence in the US with so much printing, with so much debt, and maybe we will get a shift where the bond market does not follow the rate cuts. So let's see the comments. Bitcoin, yeah, Bitcoin. We're gonna go for Bitcoin. FX Bashy, hey, how are you? What's up? Ball out, what's up? We need a nickname for Marco. Yeah, give me your best suggestions in the comments. What if Marco was a nickname? Yeah, it's a quick name, so you can use it as a nickname as well. So with the stock market, I also want to take a look at the DXY. So let me go through the DXY as well. Just a second. I got a little bit confused here with my charts. So DXY, today we're up. We had this massive sell-off on Friday. I did mention the sell-off as being sort of a mean reversion occurrence because it wasn't a data release. It was a lot of noise. It was just sort of a feeling that Powell is now more dovish than hawkish. So the actual move did not have a lot of facts tied to it, did not have a lot of strength tied to it. It wasn't like an NFP release. It wasn't CPI, PPI. It wasn't the rate cut. So it was just sort of something that's still in the air, still in the air. So that is why it got faded pretty quickly. When a move fades, you get a sell-off, and then you get a push to the upside that retraces most of the move. Or it can happen in the opposite direction as well, like on the euro dollar. I did get taken out of this position for a loss, but this is a good example where we had an explosion on Friday and then basically a complete mean reversion. So looks like the rate cut story is still in the air, and that's because we're still relying on the data. So if we go back to the DXY, short term, I'm a bit neutral. I'm a bit flat. I'm waiting out to see the NFP. I'm waiting out for the PPI. I'm waiting out for the CPI, so inflation prints. Long term, I am bearish because I do expect rate cuts to be coming and a possible, let's say, stagflation setup with rising inflation and bad employment numbers, and also maybe bad GDP numbers. So we could get stagflation like we're getting in the United Kingdom. So we could see the dollar lose some value overall. We will see. As far as the rate cuts go, let's see. Fed watch tool. Let's take a look at what's happening today. 90% chance of a rate cut in September, and for 2025 looks like there is a chance of maybe like 2 or 3 rate cuts. I think 2 rate cuts are priced in right now. Yeah, 2 rate cuts seem to be priced in. So this chart, I mean, it's a good indicator, but it has been very volatile. It has been very all over the place. You had this percentage go down to 70, then to 95, then back to 80. So it's all over the place. And no one is really sure how many rate cuts will there be. And no one's really sure if there will be a rate cut in September. It's all still in the air. That's why it's so tough to trade these markets. That's why the markets look so flat. Okay. That's why the markets look so flat like this. So it is a tough environment. I mean, the VIX going lower, right? So the VIX is definitely going lower. Volatility is dying down. S&P, if you want to trade this, I mean, we're kind of slowing down. You could be maybe selling some calls going into this price action, collecting income, collecting a premium. But yeah, if you take a look at most of our popular assets, they have been pretty corrective. Bitcoin here as well. Ethereum has pulled back, but then bounced yesterday. So let me check the comments. Marco, are you based in the US or Europe? I'm in Europe, so I'm in Croatia. It's a small country near Italy. I say Mark. Yeah, I like Mark. Macro Marco. Chartinator as the pulverizer. Okay, those are all pretty good suggestions. I think my friends would have some pretty good suggestions for you guys as well, but yeah. They definitely know how to invent some crazy nicknames. FX Bashi says, yeah, man, I don't trade every day because I only look for 4 trades a month, but I stream every day to show authenticity. Okay. GBPUSD, sure, Bitcoin, okay. The situation in the United Kingdom is not looking the best. Yeah, I mean, just let me quickly show you the situation in the United Kingdom and the reason why I really like going short on the GBP. So let me show you. If we go to the EdgeFinder, if we go to economic growth, if you go to GDP and you go to the UK, does this chart look healthy? I don't think so. In my opinion, this chart looks all over the place. If you look at labor market, unemployment, and we go to the UK, GBP, what can you see here? I can see a definite uptrend in 2025. So a definite uptrend on this chart in 2025. So that's bad. That's not looking the healthiest. CPI, let's see the CPI year on year, GBP, going up. So inflation is going higher. So basically GDP is not the best. Unemployment rate is going up. Inflation is going up. That is a case of stagflation. And stagflation is usually bearish for the currency. Stagflation is usually very hard to put under control. You know, the central bank always wants to balance the jobs market and inflation. Well, if both of them are not performing well, it's tough to know which one to focus on, and it's tough to bring the system back into balance. So yeah, that's the problem with the UK. That's why I mentioned that the UK data is not looking the best. So let's also take a look. GBPUSD. And okay, so I mean, this is pretty flat. This is pretty neutral. Okay, I did have a short position. I actually took 2 losses on GBPUSD, but the latest one was a short where I did get taken out for a loss. Right now, I'm a bit neutral on this one. I think both the pound and the dollar are long-term weak, so I don't have a clear bias. For me, I want to buy currencies that are strong and sell currencies that are weak. It's not really good to buy or sell when both currencies are weak. What I do like a bit better is the Euro GBP trade, which is also underwater, but I think it was worth the risk. So even if I do get taken out of the position, I do think it was worth going into this trade. So the Euro is doing okay. I mean, lately it has been kind of pulling back a little bit. If we go to the EU, it has been kind of 50-50 with the impact, but when I took this trade, the euro was a pretty strong currency. So we can quickly take a glance and compare how is the GDP for the euro. Let's see. So it's a bit better, I would say. It's a bit better. It's mostly positive compared to the GBP. And this is how you can build trade ideas. So euro is definitely looking better. Now let's see the unemployment rate. Is the unemployment rate in Europe going up? It's kind of steady. Okay, it's steady. So there's no uptrend, there's no downtrend, which is a bit more healthy. And as far as inflation goes, let's take a look at the inflation for the euro. inflation is actually going lower on the CPI year on year. So inflation looks to be going lower. So that's definitely not a case. That's definitely not a case of stagflation. So it's looking okay. It's looking okay. So GBPUSD we covered. Bitcoin was a request. Well, Bitcoin and Ethereum, actually Ethereum has been super crazy. So Ethereum has been pumping higher by a huge amount. I think it definitely hit all-time highs. We saw it yesterday on the stream. Bitcoin, not so great. So Bitcoin, I'm not looking to buy right now. Let me check the top setups for Bitcoin. No, Bitcoin is nowhere on the list. So Bitcoin is neutral, but gold and silver I do like to buy. I will show you that a bit later. Bitcoin, just a lot of selling pressure here. It looks a bit corrective. I'm not sure about rate cuts. A definite rate cut story would be bullish for Bitcoin. The technical analysis is not so great. Ethereum has been extremely bullish, but Ethereum is, in my opinion, pretty hard to trade, pretty hard to take positions on. And the fundamentals are hard to read. So I'm not sure of the exact reason why we had this massive explosion on Ethereum, but it was definitely a massive pump from the lows. Let's see, 231%. That's crazy. Right now, technical analysis is telling me we are still in an uptrend. We are respecting the lower trend line. So we're respecting this sort of a trend line, and I would expect for us to just keep moving to the upside, keep grinding higher. If we do start getting consecutive down days, well, then I would say the bullish story is over. Like, you can compare these two charts, Bitcoin and Ethereum. Bitcoin looks much less healthy. Ethereum looks much more impulsive, looks to have much more strength, while Bitcoin just seems to have consecutive down days. So this is what I mean when I say consecutive down days on the daily chart. Okay. Rate cuts are coming. Well, I would say they are, but it's still in the air. It's still in the air. Yes, 2 to 3 after the second cut. It will be interesting to see if we catch a third. I don't think we're gonna have a third cut, if I'm being honest. Okay. Do you recommend Blueberry Funded? I don't know anything about Blueberry Funded, so I cannot help you with that. What I recommend is FTMO and DNA Funded. I did not know. I need to get to Croatia. Yeah, Croatia is beautiful. If you get the chance, definitely visit. Yeah, Croatia is a beautiful country. So won't people be taking profits soon, causing a pullback on the charts? What exactly do you mean, Adam? I'm not sure what you mean. Croatia is lovely. Yeah, Croatia is great. Markup, okay, that's the nickname, I'm guessing. Long GBPUSD to 1.4. GBPUSD, let me see what you mean. I mean, I wouldn't place that trade. Okay, I think the pound is very weak, and it's going to continue to be a weak currency. So I really would not like going long on GBPUSD just for the fundamental reasons that I showed you on the EdgeFinder. I don't agree with you. Okay, I mean, like, year end is coming. Surely people want to profit out. Still buying GBPUSD. What website is that, Marco? So I think you're referring to the Fed Watch tool. That is the CME. Just type in Fed Watch tool, and you're gonna get this. Okay. It's a position for me to 1.4. This short-term DXY strength is a liquidity trap. There is a nice impulse coming lower. Okay. So if it fits your plan, if you did your research, if you did your homework, then stick to the trade. Hey, Marco, thoughts on the euro, silver, and oil? Okay, sure, yeah. Long GU, not short is the play. Euro dollar buy, also a good trade. Yeah, I just got taken out, unfortunately, but it may be still a good setup. You're taking silver longs. I'm actually looking for buy setups on silver, which I will show you. Oil hit the level, now down we go, 59 target. Okay, we'll take a look at oil. Okay, let's see. Gold and silver. I can see a lot of requests for gold and silver. So let's take a look. Gold, I just, from the, let's say from May, I don't have any sort of a clear entry for a trade inside of this range. So I've been telling that for quite a long time now. This range can continue for months. We can just be stuck here for months. What is good if you're a bull is that this is now sort of an accumulation phase. So Chris talks about this often, that this looks like an accumulation phase more than an actual pullback phase, more than a correction phase. So just by the way this is consolidating and maybe the bigger players are building buy positions, this is a bullish sign. Now, does that mean you want to get in here and get chopped around? Does that mean you want to take buy setups with small stop losses? In my opinion, that's a very dangerous game. If you want to take like a buy position here and have a big stop loss below the swing low, something like dollar cost average, get into a first position here, really small position, and then get into a bigger one on the bottom of the range, well, that may be the play. But why would you be in a position? Why would you pay for commissions and swaps as well, which for sure are going to be negative here if we're just ranging around? So in my opinion, a breakout is needed. What I do like is both silver and gold are very bullish on the EdgeFinder. So very bullish on the EdgeFinder, which is good to see. Okay. Yeah. Basically, I would like a breakout to the upside. What I may consider is, as you can see, I have my alert set. So if we do move into this level of support, I would be happy to look for setups. So if we do move into this level of support like this, I would be happy to look for a buy setup. And then worst case, I can just play to hit the upper part of the range. Okay. So even if we don't break out, I think we can still hit the top of the range where I can potentially take some profits, take 50% off, something like that, or just take an initial position with very small size. Overall, I am bullish. So long term, I'm definitely bullish on gold. And I just need a breakout. I just need a breakout from here. We have been ranging for months now, but hey, that's what happens on gold. I mean, look at here, range. Look at this range. I mean, this was from 2020 to 2022. Actually, this was a huge range from 2020 to 2024. So 4 years of nothing. 4 years of just absolutely corrective price action, absolutely range-bound price action. So you could get something that maybe is less, that was pretty, the swings were pretty high, but you could get a tight consolidation for the upcoming few months. It can happen. That's why I actually believe that silver may be a bit more interesting. So silver looks to be selling off here. Let me check the 1 hour chart. So we had this push to the upside on Friday, and it got completely reversed. So basically this was like a fake out because the whole move got retraced. But I still like this price action a lot. I do like the macro story. We have still some tariff drama. We still have some potential uncertainty around the Fed. Trump just fired Lisa Cook. So who's going to be the next chairman of the Fed? What will Powell do? Will Powell cater to Trump? Will they start heavily cutting rates? That all creates uncertainty. And of course, rate cuts make the dollar weaker, which make gold or silver go to the upside. So I do prefer buy setups on silver. That's why I do have this yellow flag on silver. What I would need is I would like to get, we have touched the 20 MA, which is pretty good. I would like to get a bit more bullish price action. So if we can get some more bullish momentum, let's put it a bit lower. If we can get some more bullish momentum, because what I'm worried is that this move was just a fake out, okay? Because this move was not based on any sort of data, any sort of shift in, let's say, basically shift in data. This was just a shift from Powell switching from a hawkish to a more dovish tone. And now it looks to be retracing all the way back down. So because of that, I would like to get a bit more clarity. I would like to get a bit more confidence, a bit more bullish momentum, and then I would be pretty happy to get in on a buy setup. Even if I get a bit worse reward to risk, I would still try to get in on a nice trade a bit higher. So silver is my favorite. It is definitely in an uptrend. It is respecting the 20 EMA, moving quite nicely. And I think it's healthier than gold. I think if I compare gold to silver, gold is just super flat. As I mentioned, from the month of May, nothing has been happening. While on silver, it has been steadily going to the upside, steadily going up. Now, one chart that I like to look at is the gold to silver ratio, which I don't currently have a big bias on. So let's say silver. Essentially, you want to buy gold when we are at the low of the range, and you want to sell gold, or you want to buy silver when we are at the top of the range. So this is kind of the relative value of gold against silver, and it usually moves in an equilibrium. It usually moves in, let's say, the center of this range, and we are right now very close to the center, to the equilibrium. That is why I cannot get a clear bias on this chart. So this chart is right now not the most useful chart, but it was useful for taking this trade, for example, when silver was less valuable relative to gold. So I kind of thought a repricing event is going to happen, meaning silver will catch up to gold. That is the game plan. Good to have you again, Marco. Really enjoyed your analysis yesterday. Thank you, Kelvin. And I really like being here. I really like working with you guys and going through the charts. So definitely join me tomorrow as well. I will be live streaming tomorrow on the A1 channel as well. USD yen, I think we mentioned oil. Whoop, I just opened the wrong application. So oil, let's quickly take a look at oil. For me, oil is pretty tough to read. I don't focus on oil. I think it's impacted by geopolitics quite a lot. Here, Israel and Iran. Then they cease the conflict. Then US and Russia. And then it dies down. So any sort of a position you take can be heavily influenced by geopolitics. Right now, I would say we are a bit flat here. I think there are other better opportunities out there. So for US oil, I just don't have a view right now. I cannot spot an uptrend or a downtrend. I would just say that we are pretty corrective, and that we are looking a bit flat right here. Okay, so looking a bit flat. Okay, it looks like I'm running out of time. So last request is gonna be USD JPY. Okay, so the last one we're gonna do, and also Kizito says why a 20 EMA? No reason. I just like the 20 EMA because then I know when the price is overextended. So when the price is very far from the 20 EMA, like here, okay, when the price is far away from the 20 EMA, it may not be the best time to buy. It may be a better time to actually look for a pullback, okay? So you don't want to get in when the price is overextended, because most likely a pullback will follow. USD yen, I'm neutral. I'm a bit flat, okay? I'm neutral. I'm a bit flat. 20 is my lucky number. Yeah, you could say that as well. So yeah, I don't really have a big bias if we go to the EdgeFinder. Very bearish reading on the EdgeFinder, but as far as the technical analysis goes, I don't see a massive downtrend here. So I don't have a crucial part of my analysis, which is I'm looking at fundamentals, macro, and technicals. Currently, technicals are looking flat, especially here. And as I keep mentioning this week, I am a bit skeptical on the whole rate cut story. I'm waiting it out a bit. I don't want to go heavy USD short just yet. I'm waiting for an FP, PPI, CPI. Then I will have more clarity and I'll have more data to make a decision if I want to go heavy on USD shorts. So got taken out of Euro USD, still in Euro GBP, looking to buy silver. It looks very good. I just need a bit more bullish momentum, and that's going to be my short dollar play. So buying silver is going to be my short dollar play. But if I get more clarity, I may go and short the dollar even more. That is about it. Thank you guys very much for watching. You can catch me tomorrow on my segment, and have a great rest of the week. Watch for the data. Don't ignore the noise. Just watch for the data. Watch for the US data releases. That's going to be the most impactful long term to the markets. That's it. Thank you, guys.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello, hello. Guys, how are we doing? Happy Wednesday. Hope everyone's good. So, can't do a long one today. I'll have to make it pretty quick. I've got a meeting to get to in about 25 minutes, give or take. So, I'll do what I can. Anyway, right, let's see what's going on. Can you hear me okay? I had to redo mic settings this morning, so hopefully you can hear me okay. Anyway, EdgeFinder hasn't changed since yesterday. We've still got silver, gold as our most bullish readings. I sent you a message on Discord. I don't think I've got you on Discord anymore, Ballout, so probably not seen it. You can hear me? Okay, cool. So silver, gold bullish, pound cards bullish, New Zealand, US dollars bullish. Euro dollar's fallen off. I think euro dollar was there at the start of the week. Euro yen, euro pounds bearish, actually. It's interesting. We're talking about euro pound bullish ideas yesterday. I think Marco was talking about them as well. Oil bearish, copper's bearish. Copper chart is, last time I checked, I don't really trade, in fact I don't trade copper at all, but last time I saw the copper chart, it was still in the dumps. Yeah, I mean, look at this. What an absolute mess. Just missed $6 here. Barely just missed $6, which is unfortunate for the copper bulls. However, like I said, I don't trade copper, so I'm not looking to take a trade, but if I was, I'd find it very, very tricky, because I suppose your take profits really would be down here towards 4. But in my opinion, that takes some serious cojones to get into a short position right here, especially after this. I'm fairly sure that was a tariff move. I'm fairly sure that's correct information. I don't ignore anyone, Bashi. I just make priorities. Yeah, Bola, you were there for 24 hours. Yeah, to be fair, Bashi was there as well for, I think, 16 hours or something crazy. It was nice. I think we had a good time. I enjoyed it, and I am grateful for everyone that turned up. Anyway, nothing's changed in my view. We were talking about pretty much everything yesterday. I'm looking to be a buyer of silver below 36. UBS has basically told their clients to be buyers of silver below, or buy dips below 36. Targets are up here for silver. So we've got Q4 2025 at 42. So very soon this year, we've got the second quarter of 2026 at 44, and the third quarter of 2026 up here towards 50. So we've got some nice targets that we can pay attention to. However, silver is very, very similar to gold, in my opinion, in terms of we cannot trade this, because this is just a mess. There is nothing to do. So unfortunately, as much as I would like to be involved, I just can't see anything here. Where's Lee? Yeah, good question. I don't know where Lee is. So much for a loyal viewer. Yeah, you were awake for ages. Oh, there he is. Lee's there. Till 4 or 5 a.m. Yeah, it was. I think, Bashi, you are about right there. I think it actually might have been towards 6, or ball out was towards 6. Can't remember. Good thing I didn't take dollar ZAR. The idea for dollar ZAR is still there. Dollar seems to be recovering, or had pretty much a full recovery, actually, and some from Friday's Jackson Hole and Fed speech, which is interesting. I need to do a little bit more research on the dollar. I was very heavily involved with the dollar a couple of weeks ago. When I say heavily involved, I mean on a research side. However, since I took my time off, I've kind of slipped on what's actually going on in the markets. Dollar Swiss. So let's just see. So dollar Swiss is still the most bearish with a score of -13. So what we were saying yesterday was, again, as I said, with silver and gold, there's nothing to do in this range. However, if we can break below something like this, I'd quite happily be a seller on this retest. Or if we could break above, I'd quite happily be a seller here, looking for a failure to hold higher, sort of like a false breakout or liquidity grab, whatever the term is you want to use. Lee's watching and driving. Yeah, I probably shouldn't say that, but drive sensibly, Lee. You slept with the phone on your face, Paul. I appreciate the dedication. I might do another one at some point. I really did enjoy it, but towards it, I just couldn't continue. I think it turned out to be 18 hours. I think that's how long the stream was. But you know what's upsetting is after the stream, I went straight to bed. Pretty much. I think I had some food and I went straight to bed. I woke up expecting the stream to have processed and uploaded by itself, and it didn't. Apparently, YouTube has a limit of 12 hours. And beyond that, if you don't record it yourself, then they lose it. They don't do anything with it. So I lost the whole 18-hour stream. So I might have to run it up again. Yeah, that'll be fun. Anyway. Financial markets are more important than driving. I completely agree. I passed out 4 to 5. Yeah, I think that's pretty much what it was. Yeah. The DXY fading ball out. Fed cuts, no cuts will be the decider. Yeah, I think the Fed. We mentioned this yesterday. I apologize for anyone that was sat with me yesterday. I'm kind of just repeating myself today. Fed cuts for September are priced in. Slugmeister CAD yen shorts. Interesting you bring up CAD yen shorts because we are short. However, clinging onto this 200 moving average barely. I was actually taken out. I messed up my stop loss and my stop was about here. But yeah, we are in CAD yen. And something else actually I want to bring to your attention is France 40. So let me just pull something up for you very quickly here. I think this slipped under the radar for a lot of retail. But my trader found it or clicked onto it here. This was yesterday. Our country is in danger. French PM takes confidence votes. Gamble over budget woes. They've got other things here. That one's basically the same here. French government collapse is most likely outcome. So we've decided to use that information going for a short on the, I think it's CAC 40. I'm not sure what. I don't trade it. It was, again, from my trader. So I followed his call on that one. But it seems like quite a good idea. Whether the execution is there or not is a different question. So I'll have to see about that. I'm not trying to look into your eyes and make a romantic move here, but I am just looking at a different monitor because I might be going long on Nasdaq in a second. I'm just waiting for this 5-minute candle to close in 30 seconds. Ball out, that's exactly it. Political issues. Lee doesn't trade yen pairs. I don't really like yen pairs either. I'll always avoid them. I'll always try to avoid them unless there is something that's just overwhelming that, whether it be Bank of Japan continuing to hike and another central bank cutting like dollar yen or something like that. But yeah, yen has played with me a lot over the past couple of years. Oh, Borlak, you were in France 2 weeks ago. My parents-in-law are moving to France next month. I just showed them some of the headlines and they were a bit devastated because it was their retirement plan. It's like when we retire, we'll move to France. So, yeah. The UK is not far off. I think, yeah, the UK is definitely heading in a similar direction. Just bear with me. I'm just going to take this long position here on Nasdaq and just don't follow this. This is not a signal. I'm not here to give you signals. Oh dear, that's not what I want to do. I was going with a small position here. Okay, there we go. Again, don't follow that. It's not a signal, and I am not responsible for your P&L. Jim's got baby face. Yeah, I know. I shaved yesterday. You know, it's I'm 27, and I went to the shop yesterday to get a Red Bull, and I was ID'd. It happens quite a lot when I shave, which is why I don't shave very often. But sometimes I just look homeless, so I've got to. But, you know, when I'm like 50, 60, I might still look 40, so there is always that. How many points am I aiming for on NAS? I don't know. I'll just take what I get. I'm quite happy to just sort of trail stops. I've got to take profit at the recent high on the 5-minute. He bought, dump it. Yeah, it's a breakout strategy. It's the one I tell you guys about. So we bracket the 15-minute or second 15-minute candle, and we just trade the breakout from this range. It's Trader Tom's strategy. I won't take any credit for it, but I've been using it for a couple of months now, and it's worked out very well. Also, Bashi says he likes live trades. I'm going to start live trading again on YouTube. I just need to figure out the schedule. Traded Yen-Pes twice this year. They've been successful. I'll choose my battles. Yeah, Lee, I think that's a sensible idea. Return one day, Red Bull ID. Yeah, in the UK, I don't know what it's like in America or anywhere else in the world, but yeah, in the UK, they're quite strict about ID. Alcohol, cigarettes, energy drinks. Yeah, you've got to have ID. If you know, if you don't look the age. If I shave, I'll look 20 something. Yeah. So anyway, let's get back to topics. Let me see what's going on here. So we've discussed pretty much the dollar situation, kind of. Euro Swiss is on there. Nothing too interesting with dollar Swiss. Sorry, not dollar Swiss, Euro Swiss. Here. So I was already looking at this position, but I guess I didn't take it. So damn, it's a shame. The idea was there, but I guess yeah, I should have had an alert at these highs. So Euro Swiss has got a score of -8 on the EdgeFinder. However, I am thinking we've missed the move here. So I don't want to start selling Euro Swiss. I don't want to start selling Euro Swiss here. I'd really need to see some sort of pullback, then a continuation to the downside. So there's that. Hold on, I'm just going to pull this up again because I'm going to trail my stops just below this candle here. So I'm just reducing risk. Again, I'm not supportive of anyone following that trade because I won't be here to manage it for you. Energy drink is diabolical. Yeah, yeah, they're not good, but I am a bit of a harlot for a Red Bull. They don't ID for weed or marijuana. Well, we don't even have that in the UK legally anyway, so can't relate. Yeah, you know what, Ball? There is the argument. Yeah, you know, your body and mind, but you know, when you've just traded London session, and you feel like your brain's going to explode and your hair's going grey, there is nothing better than a Red Bull. Or on a hot day. James, I've seen you posting NY lives next week. Is that going to be a regular thing? Yeah, that's the new schedule. So I've not done a live stream in a long time on my own channel. But yeah, I'm coming back. I just needed to take a bit of a break from social media and things. So thoughts on dollar ZAR short? Let's have a look at dollar ZAR. I think I'm going to have to postpone my meeting. I'm enjoying sitting here with you guys. Like I said, it's been a while, so let's hang around for a bit. 'tis my meeting at the end of the day. I can call the shots. So dollars are, what's the opinion we've got here? So let's see. Very bearish score of -11, which is strong to sway our bias a little bit. Technicals, we are in a downtrend, and we've got a very, very typical pullback so far here. So we've got previous structure. We are just around this 200 moving average, showing a little bit of rejection. Next target, if you are a seller, would be around here towards 17.5, let's say. So I quite like that idea. I don't know anything about the ZAR. That's the issue. I don't trade it. I don't look at it. It's just not my thing. I'm going to cut Nasdaq in a second. Oh no, I didn't screenshot it. Hold on. I'm just going to have to do that. I'm going to cut it because I just don't have time to pay attention. There we go. A couple of points made on Nasdaq. How much was that? Let me see. Oh, I can almost retire. That's crazy. If anyone did follow that, which again, I hope you didn't, but trail stops and just leave it to run, because I think that one could go back up to where I had my take profit level. Red Bull, proper council estate. Bashi, Red Bull's not council estate. They can't afford Red Bull. They go for those 39p energy drinks, whatever they're called. Those disgusting things. I thought America was crazy strict on any sort of drugs. You know what, Lee? I thought the same thing. So I was really worried that me and my girlfriend were going to get pulled over by the TSA. Is it TSA? The guys at the airport. They didn't do anything. I was sat there with the guy. He was like, "Where are you from? Why you come to America?" And he just started laughing. I was like, "I'm here to open some bank accounts and go to a couple of meetings." And he was just joking with me. He was like, that sounds really boring. I was like, "Yeah, it is." And he was like, "All right, go through, enjoy your time." Because, you know, there was the story of that guy that had the picture of the of JD Vance, and he got, what was he? It was like got put into detention or whatever. That was crazy stuff. America's like a fever dream. So anyway, Euro Pound long idea has been disbanded. I'm no longer interested in that. Although, actually, never mind. I thought we had some analysis on there, but I guess not. Nat Gas, ball out. Is ball out still here? Because I know ball out looks at Nat Gas, but I need his view on this because I don't trade it. But I've been hearing a lot of chatter in the shadows recently. Ball out, yeah. What do you think, man? We've got March 26th. This is UBS targets at 3.8. December 2025 is at 4.1. So they're expecting higher prices in December, lower prices in March, then all the way up to 5 in June to September 2026. However, you know, Nat Gas is way out of my scope, so I don't know what I'm doing here. I've got the chart on the watch list because I like to watch, but I don't think I'll actually be taking a trade unless I get some information from an outside source. Ball outs on your watch as well. Cool. I mean, there's also, I don't know, yeah, here, the ascending price action or trend line, whatever, here coming into a 200 Bollinger as well. I think there is definitely potential there, but again, I don't think I'm going to be able to hit that button yet. There's profit taking going on with gold, hence the choppiness. Is there? Let's see what's going on with gold. Yeah, a little bit. I want to know. Well, let's take some bets before I'm going to head off pretty soon. But before I go, I want to know. I want to get some guesses in the chat. Who has an idea of when this range is going to break? Because, you know, we've been sat here since, let's say, April of this year. We could be sat here till December, September, just another couple of days. Who knows how long we're going to be sat there? And when I say who knows, I don't mean literally who knows. I mean, obviously, it's just, this is painful. So you think after a rate cut? I think that's very possible. Ball out says buy stop breakout order. Yeah, I love a breakout. Zing Kong, you've not missed Bitcoin because we haven't traded Bitcoin, or we haven't looked at Bitcoin, sorry. So let's have a quick inspect. Again, I don't want to sit here and try and mislead anyone. Bitcoin is way, well, I don't know why I keep saying way. It's just crypto is not my thing. I just trade G7 and some indices markets, and that's about it. So when it comes to crypto, I don't know what the news is. I don't know, not a clue. However, on a basic price action standpoint here, it looks pretty strong to potentially start going long here. Nice little retest of the previous resistance here, breakout, retest, very typical price action pattern, and then looking to take price back up into these highs around 123 to 124K. I think that would be a reasonable idea, but again, I don't know what's going on behind the scenes with crypto. Slugmice, do you think definitely after rate cuts? Okay, so we're all expecting around September to be the time. And you know what I'm going to do to put some pressure on? I'm going to do this. We're going to go, is it the 8th of September? I'm fairly sure it's the 8th. I might be wrong, actually. I can't remember the exact date. So A1 viewers expect range break at rate cut. There we go. So I'm not going to forget that, and I've written down the names. So whoever's wrong, you'll be getting an invoice from me. So Bashi thinks November. Crazy. Some people are saying PCE. Interesting. Okay. I think that's also a pretty good idea. Gold can remain sideways for years. Lee, there is the caveat there, though, that anything is range bound or sideways. Well, actually, no. I suppose not. Never mind. I was trying to be clever, but I don't think that actually works. Okay, right. I think I've run out of things to talk about. We've done gold, silver. We had a quick look at Nasdaq. Dollars are not my forte, but I would like to short. New Zealand yen, I'd still like to be a seller in this market. However, I would need to see prices come up a little bit higher into these previous levels, and then I could look to short. I think shorting here is a little bit premature. I think we could definitely get that as the RBNZ continues to cut rates throughout the year, and the Bank of Japan is expected to continue their path to normalization or normalization path. Bull out, I was joking, by the way, I forgot to say this, but I was joking with you earlier. I'll check your message later after the stream. Super cycle usually enters. Take a look at orange juice futures. I don't even know what the ticker is for orange juice futures. Bashi, I'm not really sure, to be honest, my friend. You know, it's funny. I come on these streams, I'd say like 8 times out of 10, and I'll get off the stream and I'll be like, I don't actually know what I just spoke about. I've got no idea what we spoke about, what we covered, and what I forgot to talk about. So I think these segments with me are very hit and miss. You either get some pretty good analysis, or you just get a talking session where we just don't really do that much. Although we did make some money on Nasdaq, or I made some money on Nasdaq, so there is that. After the highs, then gold money will flow out. Yeah, there is also that. We could see some more profit taking. Still looking at Euro Pound? No, I'm not. I actually just got Euro Pound off the watch list because it's gone onto bullish. I'm not sure if it's always been bullish or has been recently. But yeah, I was looking to be a buyer. I think Marco yesterday was looking to be a buyer as well. And we just came on stream and saw it was a bearish reading, so I've taken it off the watch list. And that, ladies and gentlemen, is why the EdgeFinder is a necessity. Very easily filter out positions and trade ideas. We did a live trade. We did indeed, Bashi. What's your thoughts on euro dollar? Euro dollar, I think, is limited. I think it's definitely still got upside. I'm just going to show you this because I think it's relevant. I'm fairly sure I showed yesterday. So again, I apologize if I'm repeating myself, but here. So this is from ING. Earlier in August, we published monthly FX update that was centered around the view that the last line of defense for the dollar, a resilient job market, had started to capitulate. With large payroll revisions, in this note, we discuss our latest thinking of why we are looking for 1.2 through 2026. However, we've then got this one, which was by, I think it was Bank of America or JP Morgan. It was one of the two. Basically saying that the expectation for euro dollar is way too high. Historically, if you look at euro dollar, recently euro dollar had a move of 14% in 3 months, roughly. Historically, those types of moves don't continue to go. So here you can see it's expected to only be a 0.8% move higher with a maximum move of 2.6%. So the idea is there to still be a buyer, but you need to limit the expectations that you've got for euro dollar, because it's not going to be a case of it continues to just rally like it has done over the past couple of weeks, or even, is it weeks or months? Anyway, it's not a case where it's going to continue to rally like this. You might get a very slow, choppy grind, something like this, where it kind of just gradually moves up. So yeah, overall, buying makes sense, but the practicality of the execution might be a little bit tricky. Can we see the top setups including neutral? Yeah. There you go. I'll tell you what, I'll scroll up slowly so you can see them all. Just give me a minute. There may be initial pop on gold if PCE comes in soft, i.e. less than 2.8, but won't be the catalyst for sustained breakout on gold. Yes, Lee, I do agree. Okay, cool. There you go, Bashi. Hopefully that was slow enough for you to see. Anyway, ladies and gentlemen, I think I'm going to head off. Yeah, no problem. Guys, it's been great talking to you as always. Have a good one. I'll speak to you all very, very soon. Stay safe. I think I'm on again this week at some point. So yeah, I'll see you all pretty soon. Enjoy.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.